Okay, guys, I am going to do BE3-11 for my problem today. The question on the problem says, from the ledger balances below, prepare a trial balance for Peak Company at June 30, 2017, and all account balances are normal. This is straight out of the textbook, page 142 if you have the paper version. Then it gives us a whole list of accounts and amounts that we need to have on our trial balance sheet. You got to remember on your trial balance sheet that for your header you have to have the company name at the top. Then you have what sheet it is, what statement it is. This is the trial balance, and it's at a point in time. So it's June 30th, 2017. It's not a period of time. It's one single moment in time, a day in time. So when you're filling this out, you want to fill it out the same way that you're going to fill out your balance sheet, in the same order. So you do assets, then your liabilities, then your stockholders' equity. I have those listed here on the left-hand side so you can kind of see that. Then you want to list each section in order of liquidity. So you start with your assets. Your cash is obviously your most liquid asset. This is where it kind of gets confusing, debits and credits in the assets and liabilities section. So when it's an asset and it's a debit, that means that that is money coming to you. And when it's a credit, it's money going away from you. So cash, you have $5,400. So that's in the left-hand column, the debit column. Then you go to your accounts receivable. Again, that's a debit, $3,000 that you have with you or coming to you. So that's $3,000. Your equipment, you have $13,000 of equipment. So that's equipment that you own, that you have. So again, that's in the debit column. In your accounts payable and your liabilities section right here, your credit, $1,000, because you are going to pay that. It's going to go away from you. And that's all that you have in your assets and your liabilities. Then you move on to your stockholders' equity, and you have common stock. This is where your debits and your credits switch back to what everyday life kind of seems. Your credits are things that are coming to you, and your debits are things that are going away from you. So common stock, they're going to pay you $18,000 for common stock. Then you are going to pay dividends in debits. So it's going to go in your debits line column of $1,200. Your service revenue, that's money that you are receiving, so it will be a credit to you of $8,600. Then your salaries and wages and your rent expense, those are both debits that you are paying to other people. So if you want to make sure that these equal out, you need to have the same amount of debits as you do credits. So it's pretty simple in Excel. Just do a sum formula and add each section up here. And if you have the same number, it's a pretty good guess that you have it right. However, you could have switched a couple things around. You could have put like your accounts payable into your debit side and your rent expense into your credit side. And, they're the same amount. So you could have the right totals, but have a misbalanced trial balance sheet. That's pretty much how you do it. This whole debit credit thing is kind of confusing, but if you kind of get it in your head that assets are things that you own, they're debited to you. People are debiting from their account into your account, then that kind of helps. Thanks. Bye.